In this video, you're going to learn about fractal confirmations. I'm running a sale on my trading academy. You get access to my trading course, as well as my community where you get to trade with me, get personal support from me, get your questions answered, and all of that. It's a 30% sale, it's running right now, and it's probably going to run for the rest of the week. So if you do want to take advantage of that, head over to the link in the description. This page has got all of the information you need to see, and then you can decide whether that's for you or not. So hope you enjoyed this video. Let's get into it. Hello everyone, and welcome back to the channel. In this video, I'm going to break down fractal confirmations, what they are, and show you how you can improve your win rate tenfold by adopting this process. So first of all, let's break down what I mean when I say fractal confirmation. This is a definition of a fractal that I found online about mathematics, and this is various extremely irregular curves or shapes for which any suitably chosen part is similar in shape to a given larger or smaller part when magnified or reduced to the same size. So basically what this means is if we see a pattern zoomed out and then we zoom in, we will see more of that pattern within the larger pattern, okay, on a smaller basis. Now in terms of trading, this is relevant to time frames. So we could look at the daily time frame and see a pattern. Then we could scale down to the 4 hour, the 1 hour, the 30 minute, the 5 minute, the 1 minute, and see the same or very, very similar patterns, which we can then take advantage of in the same way. So fractal confirmation is basically the act of finding a confirmation on a high time frame to support your trade, and then scaling down to the very low time frames, finding essentially the exact same pattern once again, and then opting to trade into that, using that as our confirmation, because by this point, the high time frames and the low time frames all agree with us. Here you can see a really good outline of fractal confirmation. We have the hourly time frame marked here by the green. This is the main phase, and then we have this blue phase, which is the confirmation phase. And basically what I just showed you here, what we're looking for is for the price to hit a supply zone. In this example, we are looking at short idea. And then we see here the hourly trend pulling back up into supply. Then we hit supply, we sell off with this large move down. That breaks us down into our confirmed structure. So at this point, this is where many people will go ahead and put a sell order on, potentially a supply zone within this structure point, okay? But what we can do instead is wait for the low time frames to agree with us by waiting for structure confirmation on the low time frames as well. So when we get this first set of confirmation here, where the market has broken through an hourly higher low and shifted into bearish territory, instead of going in straight away and putting a sell order on there, what we can do is scale down to say the 10 minute or the 5 minute time frames and monitor the exact same structure again, where we are looking for a 5 minute trend up now through this imbalance to trade into this supply. And then when that 5 minute break happens like this, we can then go ahead and put our sell orders on around this point. So basically what we're doing here is following the exact same process once again, but on a smaller time frame. And instead of obviously selling from this point straight away after this first break, we will scale down to a low time frame and wait for the same thing to happen again within that structure to then get that low time frame confirmation, which tells us now the high time frame and the low time frame agrees. And what that is then going to do is improve our win rates and also improve our risk reward. Because instead of selling like this with a stop loss over those highs, we can actually get a refined entry like this with a stop loss over these highs because we have high time frame and low time frame confirmations. Then when the market does come in and tap our entry, we can generally get a very nice movement all the way down with all time frames agreeing and a high risk reward, high probability setup in our favor. Now heading over to the real chart, I'm going to show you an example of what it is that I've just showed you. So this is going to be a very simple explanation. We're just going to use this structure here. Obviously we can see we're in a downtrend. We have lower lows and lower highs forming. And then we had this small range here, a liquidity sweep to the upside, and then a sell-off to the downside. Now, when we've seen this break of structure, many traders will then look to sell from supply zones. So if we mark out this supply up here, that is where many traders would look to sell from. And that's totally fine. I would also look to sell from supply in a very same way. However, many traders will actually just go ahead and put sell orders on, potentially at the midpoint. Many more traders actually towards the bottom of the zone as well. So you could potentially get around a 6R trade there. And that's fine. That's a good trade. 6R is wonderful. But it's not exactly high probability because we are just hoping that that zone holds up, right? The high time frame agrees, but the low time frame could uptrend all the way through that and then continue going further. Now, the fractal confirmation that I just showed you counters this by waiting for the low time frames to agree with the high time frames before we take any action. So what I would do instead is wait for a very similar move to this to happen when we hit that supply. So see how we had lower lows breaking through into new lower lows, and then we look to sell supply. What we could look to see here is price to form that very same picture where we form consolidation, break through into new lower lows, then we can sell from there instead. So our shorts would be executed from this point, which makes sure that the low time frames and the high time frames both agree and both put the same picture in our minds before we get into trades. Now you can see why this increases your win rates, because instead of actually just betting on this zone holding up, we are seeing if this zone holds up and then using the low time frame agreement to actually get into positions. So if we scale price forward now into that zone, we will see price did approach the zone very nicely. We hit it and you would be in on your position, which would have been a winner in this example. However, what we can do instead then is go to the lower time frames and assess the price action. So we could go to the 1 minute for this example, considering the setup was formed on the 15. And what we can now see on the 1 minute is that we have a 1 minute uptrend into this point. We form higher highs and higher lows. Then when we hit this level here, we form one more higher low, but then we form a lower high and then a lower low. So at this point, we broke from this uptrend into a downtrend. And what we could actually look to do from there is start initiating some form of shorts. So as we can now see, price has reapproached this supply zone up here. So we could essentially look for a short from the current levels. We could put the stops over that high just there. And then we could actually look to sell that down towards that target we were looking for, which in this example was just going to be the lows. So you can see this has slightly improved the risk reward, but what it has done is actually massively improve the win rate and the chance of success, because we have the low time frame agreement instead of just guessing and selling straight into all of this strength that we have here. Now, if we wanted extra confirmation, what we could actually do is wait for a secondary breakdown. Now, this is something I quite like to do and something I do quite often because it increases your win rates more and generally allows you to get a better risk reward on the movement. So as we can see here, price did break down to a new lower low and now it's pulling back. And what that shows us is the trend is really shifted because we have that first bearish break of structure, then we have a significant lower high, now we have a second bearish break of structure, so we could happily look to sell the next lower high. To do that, we could mark out some supply. Now, I would be looking towards this zone primarily. However, I would also make sure to put my stops over this wick here because this is obviously the full zone. Now, this price action is efficient, so we could actually safely put stops just there. If you wanted to be even safer, you could put them above that as well. But the idea of a position that we will be looking for would be something like this. Sell limit on there, stop loss over the high, then the target back into that initial target we were looking for. And now, as you can see, an aggressive kind of approach with a quite tight stop of 8 pips gives us a 10R position instead of 6. And if we want to be conservative and put our stops over this high, we get an 8R position instead of 6. Regardless, we improve the risk reward and we also improve the win rate of the positions. What we can do is just let the trade play out and see how that goes. As you can see, the trade is tapped in and then the market begins selling off to the downside in the direction we were looking to take the market from the very start. But the benefit we have from trading this way is we have the high time frame and the low time frame in agreement. And what it really does is give us more confidence in our trade and actually gives us better planned setups with higher probability to win. Now, obviously, in a game of probabilities, the one thing we want to look for is high probability. We want to make sure that any trade we take has a big chance of winning. And we also want to make sure that any trade we take brings us a large reward if it does win. Hopefully that was a good breakdown for you of the fractal confirmation. You can see how what we just showed aligns with what I showed you before. We have the main phase where we are looking for this 15-minute break. And then when the 15-minute hits supply, we go down to the low time frames. We look for the low time frame breaks, and then we can actually get our entry using that low time frame structure. And the execution will be made from here for a high probability, high risk reward rundown. So I hope this video has been valuable. I hope you've learned a thing or two, and I hope you can increase your win rates and the reward you make on your trades by following this system. Let me know how it goes in the comments, and if you don't apply this or if you have any questions about this system, also let me know and I'll be happy to help.